Hello kind people of YouTube and welcome back to another video. As always, today we're going to take a quick look at the market and then go through some news articles from the last 24 hours or so. So let's just jump into it. I'm going to refresh CoinMarketCap here right now. Today we see the markets slide a tiny bit, not all that much, most coins down less than 1% and total market cap at 218 billion. I believe yesterday it was at about 219 billion and Bitcoin dominance up the tiniest bit to 52.1% from 52% yesterday. The big loser today appears to be XRP out of the major tokens, the biggest loser in the top 10 at least by a pretty healthy distance. Now that puts it at a distance of about 2 billion market cap, a bit more from Ethereum again, which is the farthest it has been from Ethereum in about a week or so. XRP has been losing steam following the Swell conference and XRapid going live. In my opinion, this is mainly rooted in people having too high an expectation for both the event and for XRapid going live. And people taking out their disappointment on the token, because people just expected that XRapid going live would mean hundreds of financial institutions suddenly using the XRP token, and that didn't come to pass. Instead, it is essentially a pilot with 3 companies using it for individual financial channels right now, and people had the wrong expectations, disappointed, and that is why the price is going down. Now at 51 cents, it is still significantly above where it was just about 2 weeks ago, when it was sitting in the upper parts of the 20-cent region at about 26-27 cents. So it has still pretty much doubled in the last month or so, so absolutely no cause for concern here. The analysts that I have been reading have also been pretty clear that as long as XRP remains above 40 cents in the near or middle term, the outlook is still good, possibly even bullish. But yeah, that is what we're seeing in the markets here. Let's look at an analysis from CCN. All the articles, of course, linked in the description as always, as well as some other nice stuff there. If you want to support this channel, there's ways to do that there. If you want to follow me on social media, the links are there. If you want to ask me any questions, there's an email address there and other stuff. But let's read this together, shall we? Over the past 24 hours, despite the promising price movement of Bitcoin from low $6,500 to $6,600, Bitcoin has fallen back down below the $6,600 mark. Traders have offered contrasting viewpoints throughout the past 2 days. Some have said that the low volume of Bitcoin is a concern for the market, while several stated that the sell pressure on the digital asset has declined, which may allow Bitcoin to increase in value in the days to come. Based on technical indicators alone, Bitcoin is more exposed to bears than bulls. The market is not demonstrating oversold conditions, but the low volume leaves the cryptocurrency vulnerable to movement on the downside. In contrast, for the bulls, there are significantly positive developments in the cryptocurrency sector, especially on institutionalization and strengthening the cryptocurrency exchange market. Don Alt, a respected cryptocurrency trader, said, "The next big move will be so incredibly obvious in hindsight. Bulls have, number 1, backed incoming, number 2, increased legislative and institutional interest, number 2, lows holding strong. Bears have, number 1, weakening 6K support, number 2, sell-off stronger than rallies, number 3, missing final shakeout." So the point he is making here is that there are very strong indicators for either direction, and in hindsight we will say, oh, that was obvious, we had all these indicators, but we have these for both directions right now. Cryptocurrency exchanges are also in a phase of rapid and exponential development. Coinbase is reportedly on the verge of finalizing a deal with Tiger Global to secure a $500 million funding round at a valuation of $8 billion. Within a year and 2 months, Coinbase more than quadrupled its valuation from $1.6 billion to $8 billion after processing hundreds of billions of dollars in crypto traders and serving 20 million users on its platform. Based on the progress being made by Bakkt, a regulated cryptocurrency exchange operated by ICNISE, Starbucks and Microsoft, and the increasing demand for crypto from investors in the traditional finance sector, as Don Alt noted, the next big move will be obvious in hindsight. However, in the short term, poor technical indicators of Bitcoin and many major cryptocurrencies including Ripple, Bitcoin Cash and EOS could leave the crypto market vulnerable to a downtrend. As CCN reported in its report on October 4th, a less risky move for investors would be to wait out for the next minor movement in the cryptocurrency market, possibly until Bitcoin breaks out of a major resistance level at $6,800. Bitcoin has tended to be unpredictable with its volume in the past. In 24-hour periods, Bitcoin demonstrated 20 to 40% surge in its volume. Hence, in the short term, it is possible for Bitcoin to record a sudden increase in volume and surge to break out of the $6,800 mark. For both bears and bulls in the market, the price trend of the cryptocurrency exchange market remains unpredictable, and as such, a sensible approach to trading in the market in the upcoming days would be to observe the market for any changes, particularly in the volume of major cryptocurrencies. So we are finding ourselves in an unusually unclear time right now, with no one being quite able to say where the markets are going. But like we have seen here, there are good, strong indicators for a move in either direction, and that move will likely be large. So in the next couple months, we should either see the prices explode or crash, and it will be very interesting to see what will happen. What is clear that it is unlikely for Bitcoin and for cryptos in general to be trading in this extremely narrow range for long. The markets want to move, the question is just where. But in the meantime, we have news about individual tokens and projects and investments, so we're going to go through those. This is about Augur, which is a crypto prediction market, and they are getting an upgrade. This is a long article that goes into a lot of detail, so it is very much worth reading, but I'm not going to go through the whole thing here. The link, of course, in the description if you want to read the entire article. I'm going to read the first third or so. People want to use Augur if only they could figure out how. The decentralized platform for prediction markets based on real-world events launched on the Ethereum blockchain in July. Since then, it has generated excitement beyond the usual crypto circles due to its perceived potential as a trustless, uncensorable platform to bet on sports, forecast elections, trade derivatives, and hedge against risk. But as a venture capital investor said in a recent interview, Augur's biggest pain point is user experience. This has meant that following a brief honeymoon in which Augur attracted a flood of users, 300 being a flood by decentralized application standards, the platform's daily active user count is now solidly below 100. Now this brings up an issue that doesn't get talked about a lot, but that is a huge issue for crypto right now. A lot of people believe that dApps will be the future. But what we have seen so far is with all the dApps that are out at the moment, very few of them gain a strong user base. We are very much at the beginning here yet, and we will need dApps to get larger user bases before we can even hope for mainstream adoption of dApps. And I think a lot of us in the crypto world need to be better at using dApps when there is good reason to do so. I mean, we don't have to use a terrible product just because it's a dApp, but if there is a dApp alternative to something we're already using that is just as good, if not better, and if we believe in blockchain technology, in crypto tokens, in the whole concept behind everything, and we want to strengthen the markets, we should try our best to use these products to make sure there is a user base and that will support them in the long run. It's not all down to us having to do better. Some of it is simply the dApp developers also need to do better at promoting their products. A lot of this will get better with more money flowing in, so they actually have an advertising budget. But as it stands right now, for all the potential in decentralized applications, the ones we have currently, which admittedly aren't that many, they are pretty much all failing to get an actual user base. Anyway, back to the article. One would-be user even reached out to CoinDesk for guidance on how to get started on the platform, having gone to the project's website and found it was not user-friendly at all. This is another problem that we're facing with a lot of crypto projects. A lot of cryptos are very much made, and also a lot of applications built on crypto are very much made by geeks for geeks. And for a lot of us, that is perfect. especially for people who are deeply in the tech world anyways. But there is an issue with user-friendliness. We see this even with just the concept of a crypto wallet. There have been attempts to make wallets that are more user-friendly, that are easier to use for people who don't already have a deep understanding of this kind of stuff. But a lot of smaller tokens in particular, they still make you deal with syncing the blockchain, and sometimes you have to download and install a bootstrap, and those are not the kind of things the average person is going to do. All of this needs to become easier. It needs to become really, really simple, and we are moving towards that. Especially with more people from traditional fintech and stuff like that moving into crypto, and from traditional apps moving into crypto, people are realizing that we need to overthink the design of these things. But if you're moving along very tech-minded people, you don't realize how unwelcoming a lot of these technologies are for people who aren't very tech-minded. Ultimately, for mainstream adoption, this doesn't apply to institutional adoption nearly as much. This doesn't apply to investment products nearly as much. But if we want crypto to be used as payment method, if we want dApps to come into regular use, we need to make sure they are extremely consumer friendly. They need to be as consumer friendly as a traditional bank account. They just need to people who have nothing to do with the crypto world need to be able to install a software, and they need to instantly understand what everything is, how to use everything. And we're moving towards that with newer wallets being much more user-friendly. For instance, Exodus is incredibly user-friendly. And it also looks professional. It looks nice. That is the kind of app we need for everything. And but we're moving in that direction. It just, while that is happening, while things are still primarily made by geeks for geeks, and I'm a geek myself, this is not a dig at geeks, but it's just a lot of us, me included, don't realize how complicated things that seem simple to us are to people that are new to this, especially older people who might not be very well acquainted with computers in general and with modern technologies. Crypto is a lot to ask sometimes, and if people try to get a token and it's just too complicated, buying it is complicated, keeping it stored is complicated, they run into technical issues, they find it hard to get support, that backfires. That really backfires on us. But like I said, this is not a dig at any of these things, and a lot of this started as by geeks for geeks, and it was kind of pushed into the mainstream quickly. And obviously you need time to develop new user experiences, you need time and money. So it's not the fault of any one person working in this, and I'm not bashing anyone for this. This is just the natural thing to do, but now we need to come to a new understanding, and some companies are getting to that. Anyway, I've been rambling for like 5 minutes. Back to the article. The developers behind the project, who are technically affiliated with the non-profit Forecast Foundation, recognize Augur's user experience problem. As the foundation revealed exclusively to CoinDesk, the upcoming version 2 of Augur will include a number of improvements to the platform's inner workings, which are meant to alleviate sources of clunkiness, confusion, extra cost, and risk. The end goal, said the foundation's operations lead Tom Kessar, is always a better, faster, cheaper Augur. The post emphasized that the changes will be tentative up until all the code is written and audited. Holders of Augur's wrap token will need to migrate to a new smart contract if they want to upgrade. Joey Krug, Augur's co-founder, said that the two versions will be separate universes. In addition, the foundation is working on changes to the Augur app's user interface. While arguably more cosmetic, users have been clamoring for these changes since late July, just a couple weeks after launch. And this is something I take a bit of offense with, because this is that by geeks for geeks mindset. For a lot of us, it might seem like only cosmetic stuff that doesn't really matter. But these things matter for people, for most people. Only a small number of people can get into using software that isn't visually appealing and instantly easy to understand to them. And in the geek world, that is an easy thing to do, but you see something similar with Reddit. Millions of people were into Reddit for years, and they had a large user base, but they were not at all easy to get into. for people who were not already deeply ingrained in the tech world and who were used to taking the time to figure out how a website works, to get into the culture there, to figure out how everything works, what can be done. And they got a new design, and they got a much more user-friendly app. And suddenly they find that completely new types of user bases are flocking to them. For instance, on their mobile app, they see that a significantly higher percentage of women is using it, while previously it was mainly like the nerdy, geeky 30-something man that was using Reddit. And not only, obviously, but that was the core demographic. And that is the same thing that is going to happen with crypto if we make our apps more user-friendly, if we make them more visually appealing, more easy to understand. So writing stuff like this off as merely cosmetic, that is a big mistake. That merely cosmetic difference is what's keeping us from mainstream adoption. That is in the way. As long as something doesn't look to the standard of a professional app, as long as something doesn't look as professional, as nice, as well designed, as easy to understand as the Instagram app or anything like that, mainstream adoption is not going to come. Anyway, the section of the article ends with a wish list for version 2 on Reddit has gotten a lot of attention from the community, and Kesar said that the foundation is basing its work on feedback from the thread. So ultimately here we are seeing Augur identify issues it has and overhaul both its technology and its presentation based on community feedback, and that is very good to see. That means the developers care, the developers listen, and hopefully all these changes will help make Augur even more promising than it already is. I definitely think it's promising, but it has some issues, and they seem to be working on those, so that is very, very good. Next up. Yale University invested in new $400 million crypto-focused fund, says report. Ivy League US university Yale is said to be one of the investors that helped raise $400 million for a major new cryptocurrency-focused fund, Bloomberg reports October 5th. The fund, dubbed Paradigm, was reportedly created by Coinbase co-founder Fred Ehrsam, former Sequoia Capital, I probably mispronounced that, partner Matt Huang, and Charles Noyes, formerly of stalwart crypto fund Pantera Capital. I messed up all those names, I'm so sorry. Huang was said to have left Sequoia in June to embark on establishing the fund together with Ehrsam, according to reports from the Wall Street Journal at the time. Bloomberg has today cited an anonymous source as saying that Yale, whose $30 billion endowment is reported to be the second largest among US higher education institutions, has made an investment of an undisclosed size in Paradigm. Bloomberg further reports that 60% of Yale's assets for the fiscal year 2019 are earmarked for alternative investments, including venture capital, hedge funds, and leveraged buyouts. According to Bloomberg, the fund reportedly plans to invest in early-stage crypto-focused projects, new blockchains, and digital asset exchanges. This summer, Cointelegraph reported on a group of economists from Yale that created a comprehensive analysis of the risk-return trade-off of major cryptocurrencies such as Bitcoin, Ethereum, and Ripple based on their historical performance data. So this, if it turns out to be true, now of course this is currently based on anonymous sources, would be pretty big. Of course we also don't know how much money Yale has invested here, but a major university like this getting into a crypto fund is big, that is mainstream. That means people who have influence, you have to keep in mind, the people working at Yale, their professors, their researchers, those shape public policy, those shape where science is going, those shape where social opinions are going. So if Yale is getting invested here, that is pretty big. And continuing on, Alibaba, of course a tech giant, files patent for blockchain system that allows administrative intervention. This a bit questionable, but let's read it and then we'll find out what the potential issue here is. I'm not going to read the whole thing, but enough so we know what's going on here. Chinese e-commerce conglomerate Alibaba has filed a patent application with the US Patent and Trademark Office for a blockchain-based system that allows a third-party administrator to intervene in a smart contract in case of illegal activities. The Patent Office published the patent application on October 4th. A smart contract is a computer protocol designed to digitally verify or enforce the negotiation or performance of a contract. Smart contracts are self-executing, with the terms of the agreement between the parties being directly written into lines of code. So essentially what you need to think of smart contracts is as it's just a computer program that will act according to the rules input into it without anyone else needing to do anything. Traditionally, if you sign a contract, then you rely on both parties, or more parties if there's more than two, holding up their end. And if any of them refuses to do something, you need to go to court, and it can get very messy. A smart contract does all of that automatically. The other person cannot pull out. The other person can't not fulfill their part of the contract. So that is essentially why a lot of blockchain products are so exciting, because they enable smart contracts on top of them, including, for instance, Ethereum or EOS. Well, Ethereum is getting smart contracts. The patent document, which was initially filed in March, describes a blockchain-powered transaction method that enables authorized parties to freeze or halt user accounts associated with illegal transactions or intervene in a blockchain network. The authors of the document emphasize that while blockchain technology has a number of advantageous features like openness, unchangeability, and decentralization, it still does not provide conditions applied to specific cases in a real-life environment. Now we can pretty much stop reading here. We got the main issue. Now, one of the core appeals for a lot of people of blockchain technology, and as a part of that, cryptocurrencies, is that they are open, they are decentralized, nobody can just control what is going on. And what Alibaba is developing here is something that pretty much stabs that idea in the back. Now, this is doubtless appealing for corporations, for governments, but my question here is, how easily can this be abused, and why do this when this is exactly the opposite of what blockchain technology typically stands for? The whole idea is that no one can just alter what is happening. It is immutable, it is clear, it is open, and you can see what is happening, and it will happen either way. You can't just say no. And once you have someone who can do this, it is completely centralized. There's central authority. And what really worries me about this is, if you don't know the situation in China right now, China has a very authoritarian government. The government in power is building up a surveillance state of the kind that we have never seen before anywhere in the world. It is more extreme. It is going to be more extreme in the next couple of years, what they have already planned and announced, than some of the worst dystopian novels and movies. They are literally installing cameras all around their cities, in every street, with facial recognition that will plot your every move. They are giving every citizen of their country a social score that includes not just their credit score, but how they behave, which political opinions they have, who they associate with, and if you fall low in those scores, you might not even be able to leave the country. Like, getting visas is based on your score. And that, of course, can suppress any dissent, that can keep people from acting any way the government doesn't want them to act. Essentially, there will be no freedom. And another thing you need to know about China is that they like to co-opt their major tech companies for all that stuff. Like, there are a lot of accusations against China that they might be stealing, well, not really stealing, that they might be forcing all major tech companies to give them all the data on their users. And if Alibaba, who have worked with the Chinese government, including on the Chinese government's mass surveillance system, if they are developing a blockchain where someone can change all the data, where someone can stop anything they don't want to happen, that looks like just the kind of thing that the Chinese government might want to use to suppress any dissent, to stop anything from happening they don't want to happen, to completely rip the freedom from the people living in their country. And I'm worried that this is a step further in the direction. Now, it could be something completely different, and I don't want to imply any malicious intent where there might be none. For all we know, Alibaba might be seriously trying to solve a real issue here, or they might be developing a product that will in no way be associated with the Chinese government. But this still worries me, and this goes against what most of blockchain stands for. So yeah, I just wanted to share it because of that. Anyway, let's continue on here. Here we have more negative news. We have an exchange once again caught manipulating volume. This one is a relatively small exchange that wanted to make sure it wouldn't fall off CoinMarketCap, because if your exchange is too small, if there's not enough movement on it, it will be excluded. So they were faking the volume, and let's read the actual article. BitBNS, one of the top cryptocurrency exchanges in India, was found altering the trade volumes of Bitcoin and XRP by over 500%. According to a detailed research by Kartik Verma, I probably mispronounced that, a crypto enthusiast, BitBNS had inflated the trade volumes of Bitcoin and XRP by over 500% and 668% respectively. The move could have been to ensure that the exchange platform remains on the global radar, as CoinMarketCap does not list exchanges below a certain volume threshold. After the end of the boom last year, all exchange platforms saw a sharp decline in trade volumes, with the exception of a few coming on top. BitBNS had a good market and a relatively small but consistent trade volume. By the end of Q1 of 2018, it was observed that the trade volume of BitBNS was considerably higher than its closest competition. We are talking in India, of course, here. This led to allegations of malice against the platform, which later passed off as a bug in their system. Media outlets including CoinCrunch India reported about this. Though the trade volume stabilized temporarily, it later increased dramatically, raising further negative speculation against the firm. This was when Verma decided to undertake research to check the facts. After analyzing the trade history updating system of BitBNS website, Verma deployed the system to record the trade history of all Bitcoin and XRP transactions on the platform. Using a detailed program, the data was sorted and recorded based on 4 parameters: serial number, timestamp, volume, and price per unit. An extra code which will negate generation of duplicate data was also added to ensure the result was accurate. Data for a 24-hour interval was recorded and stored in the database. Once the data were aggregated and compared to the values put upon the BitBNS website, a huge disparity was observed. Verma said, "The recorded data showed the trade volume of XRP over the 24-hour interval as 62,365 and that of Bitcoin as 2,638. But on the BitBNS website, the trade volume of XRP was shown as 375,410, almost 500% more than the actual volume, and that of Bitcoin was shown as 20,266, almost 668% more than the actual traded volume." So that is what we need to read here. Bottom line, once again, someone has been manipulating how much is being traded on their platform, and this time it was very easy to catch if someone was just able to watch the movements and check them against the numbers they're sharing on their website. This is of course troubling, and anytime this happens, it is negative news for crypto as a whole, because these are the kind of things that mainstream media reports on. These are the kind of things that people who are not already in the crypto world see, and they get worried about crypto. Now, I don't think we need to be too worried about this exchange, but this is a pattern that we see with multiple exchanges, and we see something like this is coming out every other week. It's a bit ridiculous at this point. We need to do better. And in some way, you can kind of understand why they would do this. They are, of course, under immense pressure to look like there's a lot happening on their website, because otherwise, who is going to use it? For them, this was probably about the continued existence of their platform. But still, you don't do stuff like this. This is fraud. This is essentially fraud. Don't do this. Anyway, last for today, some positive news. A lot of people on the channel support EOS, and so do I. So now we're looking at an article from News BTC. Once again, will be linked in the description. And what is found is that EOS is down the least so far in 2018 out of major coins, with a drop of only 23.4%. And let's read this. I'm not going to read the whole article. It goes into what EOS does, what EOS's future might be lower and lower in the article. So of course read it if you want to. I just want to see the top of the article here. A list describing the price trend of top cryptocurrencies in 2018 revealed EOS had the least bearish drop in 2018. According to the document, EOS depreciated by 23.4% against the US dollar by the end of Q3 of 2018. It imposed less losses on its investors compared to other top cryptocurrencies, which include Bitcoin, Litecoin, Ethereum, and Ripple. Collectively, leading cryptocurrencies underwent an average decline of 74%, with Qtum being the most bearish cryptocurrency with a 93.2% fall. Oh, I'm actually surprised I don't see XRP in here. Well, I guess XRP recovered significantly just before this statistic was done. Cryptocurrency markets work like any other traditional market. When money goes out, the market drops, and when money comes in, the market rises. Well, yeah, we didn't need this explained to us. Digital assets within this space also react to the whims of supply and demand. The latest figures explain that investors were pouring money into the EOS project throughout the year, and the majority of them remained long in their positions, expecting higher profits despite the ongoing bearish market trend. And here they just go into some general stuff that anyone should know about EOS, and just arguing that this is probably general market sentiment. Now, of course, we see a lot of people who do hold EOS are very, very strongly in it for the long term. In my experience, when you're talking to EOS supporters, you will find that a lot of them truly believe in the project, believe it will be one of the top cryptocurrencies for a long time, and that it might even dominate the markets in the coming years. The EOS technology, of course, is extremely promising, and there's a lot that might happen on top of it, and I'm definitely very supportive of it as well. Seeing it drop so much less than most other tokens from the beginning of 2018 until the end of the third quarter is very promising. Let's hope when the next bull market hits, it will also outperform other tokens in its growth then. This is what I'm gonna end today's video on, because once again it has been over 30 minutes. As always, thanks for watching. If you want more of these videos, I do them every single day, make sure to subscribe. If you like my content and would like to give a small donation either through PayPal or a crypto donation, everything for that is in the description. All the article links as well in the description. I'm planning to make a question and answer video soon, so if you want your question to be included, email me. Pretty much anything can be asked there. I would prefer if you kept it to crypto in some manner though. And my social media links are also in the description. That's gonna be it for today. Thanks for watching, and I'll talk to you guys tomorrow.